The Eurasian Development Bank has signaled it will decide whether or not to move forward with financing a large portion of the funds needed to put Armenia's long-stalled Amulsar gold mine into operation only after an environmental impact assessment is completed later this year. Two senior bank officials told reporters this week that they stand ready to extend a $100 million loan to allow the controversial mining project to move forward, but warned that if the results of the environmental examination do not satisfy the EDB, they will not implement it. The assessment, conducted by the bank, is expected by August. In a surprise move earlier this year, the Armenian government signed a $250 million memorandum of understanding with the Eurasian Development Bank and the mining company Lydian Armenia, greenlighting operations at Amulsar. In return, Lydian ceded 12.5% of its shares in the mine to the Armenian government. Lydian broke ground at Amulsar in 2016, but development was indefinitely suspended 2 years later when environmental activists and residents of nearby communities began staging blockades of the mine entrance. After years of delay, the Armenian government now says it wants to revive the project, but neither the government nor Lydian have given any dates for the planned start of operations. In a separate development last month, Armenia's parliament approved a deal to buy out a portion of Russia's stake in the Eurasian Development Bank to the tune of $64 million, increasing Armenia's shares from a meager 0.07% to 4.23%. That came after the board of the Kazakhstan-based bank unanimously approved a major shakeup that will see Russia lose its majority stake, a move believed to be designed to reduce the bank's exposure to potential sanctions. The French drinks giant Pernod Ricard, which owns Armenia's most popular brandy producer, said last week it will cease operations in Russia and no longer distribute any of its products in the country. The move, which came after mounting public pressure to cut business ties with Russia, throws the future of the Yerevan brandy factory into serious doubt, as Russia is the world's biggest market for Armenian alcoholic beverages. A spokesperson for the Yerevan brandy factory did not immediately respond to CivilNet's request for comment. However, the local news site MediaMax has reported, citing unnamed sources with knowledge of the matter, that speculations in the press that the Yerevan brandy factory is stopping exports to Russia do not correspond to reality, adding that the company remains committed to ensuring the uninterrupted availability of its products everywhere. Brandy, or cognac as it is more widely known in Armenia, has long ranked as one of the country's top exports. Last year, Armenia exported upwards of $290 million worth of brandy, with about 3/4 of those exports destined for Russia. The Armenian government sold the Yerevan brandy factory and its famed flagship Ararat brand to Pernod Ricard, the world's second largest wine and spirits seller, for $30 million after the Soviet Union collapsed. Pernod Ricard has said it expects it to, quote, take some months to wind down its Russia business, which, according to Reuters, accounted for 3% of its global sales last year. Russia's full-scale invasion of Ukraine last year has sparked a massive corporate exodus from the country, with hundreds of multinational companies curtailing operations. In a regional update last week, the International Monetary Fund forecast Armenia's real gross domestic product to grow by 5.5% this year, noting short-term benefits from the war in Ukraine while also warning of longer-term risks. That is the highest expansion forecast for any country in the Caucasus and Central Asia region and well above the expected regional average of 4.2% growth. It also falls in line with trends from last year, when Armenia's record 12.6% growth exceeded those of all 7 other former Soviet countries in the region. Overall, the IMF pointed to a milder than expected contraction of the Russian economy and large inflows of income, capital, and migrants from Russia as the main drivers of the region's ongoing economic boom. At the same time, the IMF noted that Russia's invasion of Ukraine has introduced immense uncertainty to the economic outlook, warning that a reversal of inflows, worse than projected Russian growth, supply chain disruptions, or lower remittances could all prompt a negative economic shock in the region. Armenia's year-on-year inflation rate fell to 3.2% last month, down sharply from 5.4% the month before, according to new data from the country's statistical committee. That figure is considerably lower than last year's peak inflation rate of 10.3% and sits below the central bank's 4% inflation target for the year. Even as inflation in Armenia continues to ease, the country's central bank decided earlier this month to leave its benchmark interest rate unchanged at 10.75%. In a statement, the bank noted that the overall inflation environment remains elevated due to sustained high demand and pressures from the labor market. Amid rising inflation last year, Armenia's central bank hiked its interest rates 6 separate times, most recently in December. Central banks often raise rates when they believe the economy has become overheated and prices are climbing too quickly. And as always, please follow CivilNet on all your favorite social media sites for the latest news and independent journalism from Armenia, Nagorno-Karabakh, and the region.